My name is Jeffrey Kennedy, editor of Traders Classroom. In this episode, we're going to be discussing price gaps and the types of information that a price gap actually offers. First, I want to explain exactly what a price gap is. A price gap forms on your charts whenever one period or 1 day's worth of trading does not incorporate the range of the prior bar's trading. Notice between these two bars, this one and this one, there's no overlap between the ranges of those two price bars. So the end result is a vacant space on your price chart. This is what a price gap is. Now, it seems kind of simple to begin with, but a price gap can actually offer us as analysts and traders a ton of information. For example, if I look at the markets from an Elliott wave perspective, price gaps are quite useful. There are 4 types of price gaps: common, breakaway, acceleration, and exhaustion. Where these gaps occur can aid the Elliottician in identifying the substructure of a developing impulse wave. For example, in wave 1, here we have a breakaway gap, and then later on, that occurred earlier this month of January, we saw an acceleration gap. This is BlackBerry. Now, price gaps can also identify significant reversals of trend. For example, this is Virgin Galactic Holdings, ticker symbol is SPCE, and you'll notice between December and January, we saw 2 types of price gaps, or actually 2 gaps. One was a gap to the downside, and then in January, we saw a price gap to the upside. Well, this left behind a chart pattern that old school technicians refer to as a bullish island reversal. So this is how a price gap, again, at first glance, it seems quite a simple type of chart formation. It contains a ton of information, whether you're looking at the market from an Elliott wave perspective or simply looking for those significant turning points in a particular market. Another thing that gaps offer us would be trading opportunities. Now, this is a classic trade setup using or based on price gaps that I talk about in Traders Classroom, called the closing the gap trade setup. This occurs whenever you see prices gap up in one direction, and then shortly thereafter we move back into the range of the bar preceding the gap. We see this here in Apple. It occurred in late November, and then again it occurred early in January. Now, one stock that I'll be talking about next week in Traders Classroom is a stock that does indeed have an island reversal. So if you'd like to learn more, simply tune in next week. Thank you.